Hello everyone, Chris Lashava with RE/MAX Heritage Professionals, and in this video I want to talk a little bit about the difference between a mortgage pre-approval and a mortgage pre-qualification. Oftentimes these words or these terms are used interchangeably, but they are really not the same. A mortgage pre-approval, mortgage pre-qualification is basically when you meet with a mortgage lender. You tell them what your income is, you tell them how much cash you have for down payment, you tell them what your credit score is, and based on that information, they'll give you an estimate of what you can afford for your mortgage, what kind of home you can purchase. A mortgage pre-approval, they actually get the documentation and verify the documentation. So they'll get W-2s to see your income, or 1099s to review your tax return. They'll actually pull your credit. They'll look at your bank accounts and see how much income or see how much money you have in reserves. So it's a much more accurate estimate of what you can afford. Also, because they pull credit, they'll be able to tell you what your interest rate's going to be, and so you'll get a much more accurate estimate of what your monthly mortgage payment's going to be, minus, of course, an actual house with the property taxes and HOA fees and things like that, and homeowners insurance, but at least an idea of what you can afford. A mortgage pre-approval takes a little longer to get on the front end, but it saves you a lot of time on the back end because you've already submitted the documentation. In today's market, most sellers want a pre-approval included with your offer for the purchase of their home. They're not going to accept a pre-qualification because, in all honesty, a pre-qualification isn't worth the paper it's written on. People, believe it or not, lie about how much money they make. They lie about their credit score. Some are just uninformed, not really sure what their credit is, or they're relying on Credit Karma, which is not all that accurate. Others forget how much they took out in taxes, and so, or how much exemptions they claimed, which affects their income. So there's a lot of different factors that come into why a pre-qualification is not nearly as valuable as a pre-approval is. If you're just trying to get an idea of what you could afford and you're not seriously looking yet, then a pre-qualification is probably okay. But once you're getting serious, you really want that pre-approval so that you're not looking at houses that you can't afford. That's the worst thing you can do. And so, you get that required documentation together, you meet with a lender, they run all those numbers, and they give you a really good idea of what you can afford and what your monthly payment's going to be. And all you're really waiting for is the house. They need an address. And then the house needs to pass muster. So it needs to appraise, you need to get through inspections, they need to make sure that there's clear title, they need to make sure that the lien search is clear. But once all that's done, that's in the end, your full mortgage application, and then you're ready to go ahead and get closed on that house. So that's just a quick overview of a difference between a pre-qualification and a pre-approval. Remember, what you really want to do if you're serious about buying a home is you want to get pre-approved, and you want to do that before you start looking at homes. Otherwise, you don't really know that you're looking at homes that you can afford. I hope this information is helpful. Please subscribe to my YouTube channel. I love to have more subscribers on here. Tell your friends and family about me. And remember, if you're looking to buy or sell a home in Central Florida, please reach out to me. I'd love to help you or your family or friends. Have a great day, everybody.